Hi, I'm David Lisworth, one of the senior partners at Tatnell-DLS. Well, it's that time of the year again when we need to start considering tax planning for 2015. In our experience, there's three main reasons why people pay too much tax. They don't plan ahead, they fail to act before June 30, and they don't get the right advice. Firstly though, just a reminder that the information today is for general advice only. Come and see us before 30 June to discuss your specific tax needs. Having said that, we don't want to get caught out by waiting till July to consider our tax planning. Have your personal circumstances changed significantly from the previous financial year? Are you in business? Have you changed jobs? Have you purchased or sold a property perhaps? Or maybe you just feel like you're paying too much tax. Remember too, there's increased ATO audit activity. You need to be able to substantiate your claims. What sort of things should we be considering before June 30? Well, if you're an employee, there are a number of things that you can consider. Have you maximised your super contributions? Do you need to? Well, that's one of the things that we can look at. If you have a salary package, maybe there are some other things that you can package that will be tax effective for you. Do you use your motor vehicle for work-related purposes? If you do, we need to look at whether or not you're required to keep a logbook. How long do you need to keep that logbook for? Or maybe you can just claim under the cents per kilometre method. Either way, you don't want to miss out on valuable tax deductions. Do you work from home? Do you use your laptop, your iPad, your tablet, your phone for work-related purposes? We can look at what claims you can make: electricity, phone, internet, things like these. What if you actually use your home as a place of business? Well, then there are extra deductions that may be available to you, such as percentage of your rent or perhaps even your mortgage. Do you have a rental property? Importantly, particularly if you've purchased one this financial year, you don't want to miss out on the negative gearing benefits. Look at things like perhaps prepaying interest for the 2016 financial year in 2015. What should I spend before June 30? Have you refinanced? If so, can you claim the refinancing costs? Or importantly, if you've sold one, we need to look at the capital gains tax that may be applicable. For business owners, tax planning is especially important. Thousands of dollars can be saved with some simple tax strategies. One of them we'll look at, of course, is superannuation. Do you need to maximise your super going towards June 30? Have you changed motor vehicles? Do you need to change motor vehicles? There's special depreciation deductions available for business owners. Looking at equipment as well. Do you need to replace equipment? How much should I spend? Again, there's a special threshold for business owners where they can get an immediate tax deduction by spending that money before June 30. There are a number of other strategies that can be looked at. Looking at ways of delaying income into the 2016 financial year. If you have a business loan, look at prepaying the interest again for the 2016 financial year in 2015. What about your employee superannuation? Normally your June super would be paid in July. Well, there may be a benefit in paying that before June 30 and getting the tax deduction this financial year. Now, if you have a trust, it's particularly important that we look at doing the trust resolutions before June 30. And if unfortunately you have some bad debts, we'll need to look at whether these need to be written off before 30 June. Now, if you have a self-managed super fund, you already know there's additional benefits that you don't get with an industry fund. But did you know there's a mechanism for claiming a double tax deduction for contributions in the current financial year? Now, strict rules apply and there are conditions, so you need to talk to us first. But this can be an important strategy if you need extra tax deductions this financial year. Looking also at non-concessional or contributions that are not tax deductible, you have a maximum cap generally of $180,000. But did you know you can bring forward 2 years and possibly get 3 lots of $180,000 into superannuation this financial year? But we need to consider whether that's a tax-effective strategy or not. In any case, these are just some of the important tax strategies that we're going to look at before June 30. So as mentioned, don't wait till July. Contact us now to book your appointment for your 2015 tax planning. Thanks for watching.